Welcome to the Real Money Show, the number 18778 Silver, the website guildhallwealth.com, Outlook 2025. We'll talk about where we see gold and silver going. And more importantly, not just us, because who are we? Let's see what the experts are saying, right, Jerry? We've only been in the market combined total for 25 years. What do we know? But hey, let's see what the experts are saying. Where can you expect gold and silver to go? And if you want to know about holding gold and silver in a registered account, come visit us at a seminar. We're having a seminar on February the 1st. It's going to be up in Vaughan, near Vaughan Mills Mall at the Novotel. Just give us a call at 18778-SILVER. And of course, if you want to get some additional information on how to get involved in the gold and silver market, you can visit us at guildhallwealth.com and our e-store, guildhallpreciousmetals.com. So investing seminar, Saturday, February the 1st. It's going to start at 10:30, and you can just give us a call at 18778-SILVER and book your spot. Jerry, let's talk Outlook 2025. We've been seeing some pretty good signs. And some of the major banks, we'll get into specifics a little bit further in the show. But basically, they're calling for $3,000 gold.
That's it.
And we've heard some numbers as high as 3,600. And what do you think the path to $3,000 gold looks like? And what does that mean for silver?
Well, the stage is already set, Jeremy. This obviously began with inflation and a lot of currency printing that was done starting 2019, 2020, with the 40-year high inflation that was transitory. But, that was debunked really quickly. The Fed obviously had to raise rates to show that they were going to do something about it, that the problem that they caused. We've come into 2025 where all central banks have began cutting interest rates, which is the clear trend right now. And the main focus is on the U.S. Will the U.S. be cutting rates? Because we specializing in precious metals, we dealing in precious metals, we have to be very cognizant of what's happening to the U.S. dollar being the world's reserve currency. So that is the major trend following this de-dollarization trend. And how does the U.S., how does the central bank manage this tightrope between managing inflation, or look like they're managing inflation, and interest rates? Obviously, if we look at the trend right now, the trend is pointing to, and the Federal Reserve is saying only 2 cuts for 2025. That's like saying inflation is transitory. I called right through it. This is going to be a big farce. The U.S. needs to cut interest rates, and that's going to be the trend going forward in 2025. Expect more cuts. Because the Federal Reserve is simply trapped. If you look at the 10-year Treasury yield, that is causing a bond massacre around the world. If you look at the UK, even the US, the 10-year, if it approaches that 5% yield, you better watch out. The banks are feeling it. This is the bond carnage that we're seeing. The very collateral that backs the bonds are in trouble. This is the reserves. This is the reserves that are on the banks, Jeremy. And as we're seeing, liquidity is drying up. And the U.S. has to get to work and start cutting interest rates. And, this is what happened. I mean,
So is it as they cut interest rates, it lowers the cost on the cost burden, as they would say, to hold physical gold? And so that would be a key reason to hold physical gold as interest rates are falling, because you're no longer getting yields. So you might as well pay to store the stuff.
Yeah, and that's the algorithm that's at play to chase the yield. It's all computer bot driven. But as we're seeing the U.S. dollar, it's kind of topped out right now. The U.S. dollar has been hitting highs, all because of anticipation that the U.S. is just going to cut rates twice. If you cut interest rates, you weaken your currency, and gold and silver are inversely correlated to that U.S. dollar. But gold and silver have really hung in there. As Zero Hedge pointed out, gold stuck it out long enough and now trades above both 100 and 50-day moving average. Resistance has now become the support. We have a lot of tailwind support for precious metals. And for now, the soaring dollar is keeping a lid on gold. But the moment the U.S. starts to dip, you better watch out above. Precious metals will skyrocket on a weakening U.S. dollar. You watch this.
The number 18778 Silver, the website guildhallwealth.com. It's not just the U.S. weakening dollar. What we saw last year for Canadians was incredible gains in gold and silver, both in the high 30s range. And that was basically because the Canadian dollar became so weak. And it really confirmed what Rick Rule talks about. He used to manage at Sprott Asset Management. Now he's opening up his own bank. He's an analyst in the mining market, knows his stuff backwards and forwards and upside down. And he always facetiously will say in interviews he holds gold not because he wants it to go to 10,000, but because he's afraid it's going to go to $10,000.
That's right.
And I feel like what we saw in gold and silver last year in Canadian dollars was an example of that. It's nice that it went up 35%, 38%, but it was an indication of just how bad the Canadian dollar had really gotten. Mm-hmm. At the same time, it fortifies the argument that the reason you hold physical gold and physical silver is to hedge against the decline in those currencies. And there's no doubt that printing money has not been good for these currencies. They've all fallen. Now, they all fall at different times. Mm-hmm. Sometimes the US dollar's falling faster. Sometimes the Canadian's falling faster. It's like throwing a bunch of marbles down the stairs. That's what you're watching with these currencies. Now, how are you? You are on your own. In the meantime, central banks are buying gold. We think it's a clear intention that gold is going to be revalued much, much higher. And I think when you look at global debt, it's, $300 plus trillion, not including unfunded liabilities, becomes a lot easier to handle if your assets have ballooned massively higher. If you had if you were struggling with an $800,000 mortgage, but your property just doubled in value, the bank says, well, we like your debt to income ratio here.
Yes.
Right. Or debt to value ratio. So I think that that's sort of what we're looking at ultimately in the gold and silver market, more in the gold market, that this is an asset that will be revalued. It is a hedge against inflation. It's a hedge against the devaluing dollar. And more entities are going to look for that. I saw, we'll talk. What you were going to say?
Well, this is the focus for me, Jeremy, as we are seeing the carnage with the bonds that are happening, the very collateral values that back, or the very collateral that backs these bonds, they're losing value. The very reserve that we're talking about that is supposed to keep the banks stable is falling dramatically. And as a result, the banks can't loan, they can't receive loans. Banks and liquidity strictly just dries up. So the main focus has to be on the reserves. What is in the reserve that is going to retain, that is stable, that is going to retain value, and that can be used on a balance sheet, just like you mentioned a mortgage. Well, what is your down payment? Are you going to bring more printed currency? You've already dismantled and destroyed the currency. That's not going to be it. We're going to have to look to gold. Judy Shelton mentioned a gold-backed bond is a solution, and I do feel that would be the solution. A weak dollar policy is what I'm anticipating. If you're going to be cutting interest rates, you're going to be weakening that dollar.
I 100% agree. I think it's about getting the dollar weaker, but at the same time clearing up excess spending, trying to get the economy on the go. It's like you can't do both at the same time. And I think that we want a weaker dollar. We want exports. We want to lower interest rates and lower the burden on everybody. And I think that that's kind of where this is headed. And so the fact that the Fed is like, we're only going to cut a couple times. Come on, the pressure on the central bank to cut is going to be tremendous. It
is tremendous, and that is coming down the pike right now as Trump spoke earlier this week. President-elect, he's coming in very soon, about 11 days away. As he was speaking about a $20 billion DAMAC deal with Dubai just this week, he landed a deal with Dubai to start building some data centers in the U.S., so it's already beginning, some good fruits. But he did have some comments at the press conference. Trump commented on the state of the U.S. economy, that inflation is continuing to rage. It's not because of his tariffs. Inflation was already there, so let's put that aside here. Tariffs are not going to be inflationary here. If you're going to be focusing on national and domestic building, it will actually go the other way. But he mentioned something very key. He mentioned that interest rates are far too high. The pressure will come. and he will lay in on the Federal Reserve to do your job and start cutting rates, weaken that US dollar. But there's a big difference, I think, Jeremy, would you agree? It's a big difference between having a weak dollar, but having a dollar with credibility. You can have a weak dollar and manage your debts, relieve the burden of the debt, manage a little bit more. But having global credibility with your US dollar is the key here, and bringing gold alongside, and which is the reason why we're seeing a rush around central banks around the world seeing this. They're eyeing, and we have the data coming in from the World Gold Council. We'll get on to that data in the following what's the word I'm looking
segment.
Well,
and
segment.
also what billionaire Ray Dalio says about gold.
Key.
Let's see what he says about gold, and he's also comparing it to some cryptocurrencies as well. So we'll find out what one of the most successful hedge fund managers and billionaire is saying.
Yep.
Look, if you're looking to build your own monetary reserve for the future, just like these central banks, you want to explore the eStore, Guildhall, preciousmetals.com, gold and silver, competitive prices. This is where you're going to be able to easily start accumulating. Go to the eStore, Guildhall Precious Metals. We've got you covered. Investing seminar, you're going to learn how to hold physical gold and silver in your registered account and why this vehicle is absolutely the best way to do it. Come get to meet the staff at Guildhall and ask us all the questions that you need so that you feel very confident moving forward. And again, Outlook 2025, where is the market headed? It's very, very exciting. So stay with us. The number 18778 silver, the website guildhallwealth.com. I mentioned that we're having a seminar on February 1st, and if you want to book a seat, please give us a call directly at 18778 silver to book your seat and learn how to hold physical gold and silver in your RSP, TFSA, Lira, LIF, RIF. But of course, the deadline coming up, we're talking mostly about RSPs.
Don't get left out.
Don't get left out. Learn how to do it. This is the time. And, it's a great way to diversify a portfolio. Mark Faber, analyst in the market, the Doom, Gloom, and
Doom, Boom, and Gloom.
Doom, Boom, and Gloom report. We interviewed him once upon a time. Great to see what he always has to say. And he recently came out and said you should have not 10%, 25% precious metals in your portfolio as a hedge. And obviously, with everything's going on, I would just add to this, Jerry, that Ray Dalio had a quick little interview this week. We put it up on our X feed. And he basically said, gold's a diversifier, right? Everything that we say, for all the reasons that we say, he shadowed it. He repeated it. Mm-hmm. And he just said, yes, it is a diversifier. You want something that's going to be negatively correlated to the dollar, and you want something that is doing well when other things may not be doing well. And then he just sort of, as an aside, he said, Bitcoin is a speculative asset and gold is a reserve asset. So these are the key differences. And so he's like, I own both because mm-hmm. you're allowed to have both. You're allowed to have a full portfolio that's diversified.
Freedom.
But here we are, Mark Faber's saying 25%. And so we were just before we came onto air here, after the break, we said, well, where did the 10% come from? And lo and behold, Jerry had the answer right like that. So, Jerry, where did the 10% come from?
The first proponent of the 10% rule was former U.S. Fed Reserve Governor and Harvard economist John Exter, via his Epiphanius the Exter's pyramid, which illustrates the risks inherent in each type of asset class. Remember, it's that inverted pyramid. And according to him, during a financial crisis, investors will move out of less liquid debt-based assets and into more liquid physical assets. Physical gold, to him and to us, is considered the safest of all assets. It's the base and power money of Exter's inverted pyramid. And to us, even more so, silver would be at the very tip. But it is a common theme for us, a common question: how much of my portfolio should I allocate to gold? Should I allocate to silver? And we look at, and this is why we have to include trend forecasters, experts like Mark Faber, and even like experts like Egon von Greyers. For instance, back in 2002, The world was in a government deficit and runaway bank credit crisis. At that time, Egon von Greyers, who's a board member of goldbroker.com, he advised his investment clients to put up to 50% of their assets into physical gold. And he's one of my personal go-to, I call him my online mentor, who is recognized as one of the world's foremost gold investment experts, historian. He sees the situation a lot worse today. And I think we are seeing that, wealth protection, this trend is more critical than ever. And this is what we're seeing. Official central bank statistics coming out from the World Gold Council last week that shows that the central banks around the world are continuing their spree. Their gold spree is continuing and it's playing a leading role for the demand in gold. November represented another solid month of gold buying as central banks collectively added net 53 tons to official gold holdings. So you had the Reserve Bank of India that's continuing, added 8 tons. The National Bank of Kazakhstan added 5 tons. People's Bank of China obviously continued to add huge demand. You even had the Central Bank of Jordan, Turkey, Czech Republic, Czech National Bank, the Bank of Ghana continuing to add physical precious metals, physical gold in their coffers. And this ongoing demand to us sends a clear message to our listeners, to Canadians, to our investors. Gold isn't just a relic of the past, it's a foundation of the future. Central banks, who are the custodians today, unfortunately, of global financial systems, are putting their trust in gold as a safeguard against inflation, currency fluctuations, poor loonie, and the geopolitical uncertainty that we're seeing right now. Obviously, a lot of uncertainty, what these tariffs are going to do and what's Trump going to do. But for everyday investors, the opportunity is very obvious. Follow the lead of these central banks, these major institutions, these trend forecasters, and stockpile it for yourself. Become your own central bank with Guildhall, as they're owning physical precious metals for 2 reasons. Number 1 is global liquidity. You're never cornered. And then the second reason is you need independence. You need a reserve that is independent from the devaluation of currencies and risky financial institutions. The banks are feeling the pinch. Liquidity is running dry, and you're going to insulate yourself with physical precious metals. And remember, Canada Central Bank, the Bank of Canada, has no gold reserves. Your thoughts on this allocation percentage, Jeremy?
Well, I think that, it's funny, the Abitson Associates research report that said, yes, we've done the math on this. We've looked at the 10%. And yes, if you held 10% in your portfolio, it's worked very well. It's actually given your portfolio a boost overall. Of course, when that article research paper was done back in 2008, it was pre-quantitative easing. And so there were a lot of things that hadn't been accounted for in that report, which true. Is that if you're going to lower interest rates and print, unbelievable amounts of fiat currency, that's got to find a place to go. And people get stuck into a chasing yield sort of mentality. Is where do I put it? I'm going to put it into real estate. I'm going to put it in the stock market. I got to chase yield. I don't get the interest in the bank. Of course, gold has proven that you don't have to chase yield. And I think that if the appropriate amount of risk that got added because of that should also dictate a further gain in how much you're holding. Mm-hmm. We have a lot of conversations, Jerry, with clients who have registered accounts and that are holding more than 50% precious metals, like Egon von Greyers has discussed. Mm-hmm. And their biggest complaint is not that they're holding more than 25% in their holdings. Their biggest complaint is that when the price of gold goes to where we think it's going and the price of silver goes to where we think it's going, and they're so confident about it, that their biggest concern is that they're going to pay all these taxes when they withdraw it from their RSPs, when it converts to a RIF. And we're having these discussions where we're saying, yes, but what we're trying to achieve here, sort of like the wealthy barber, is you want to get to a place where you have $1 million plus in your registered account. And that gold has done those massive moves to $6,000, $7,000, $8,000. Silver's gone to $200, $300 an ounce. And wait till you hear the articles we're going to tell you about that show you that it could go there. and why and how. And at that point, you're gonna rotate out of precious metals. You're gonna sell off 2/3, 3/4 of your position and move into interest-bearing accounts, dividend yielding stocks. And at which point you're gonna withdraw. You're going to be living off of dividends, living off of interest, which was the whole idea. Mm-hmm. You go online, you watch any person who's super rich and independently wealthy, and they say, what do they all say? I live off interest. Paying taxes with interest is a lot less of a bite than having to sell off your assets to do it.
That's right. You don't sell.
So that's the whole goal here. Now you got to start somewhere, and you have to look at assets that are growing, and gold and silver are doing that. Jerry, I want to, before we kind of get into break, by the way, if you want to get involved in the market, you got to give us a call. The number 1-877-8-SILVER, the website guildhallwealth.com. Crawl, walk, run. Start with getting something in your hand to get that aha moment to understand that this physical asset is something that is yours and has no counterparty risk. No one can take it away from you, and that's why central banks are buying it. So it's always great to crawl, walk, run. We have an investment seminar coming up on February 1st at 10:30. It's going to be up in Vaughan. The number again, 1-877-8-SILVER, the website guildhallwealth.com to learn more. Jerry, I want to quickly talk. We're kind of talking Outlook 2025, and I have a tale of two outlooks. Goldman Sachs says that $3,000 gold is not in the cards because the Fed is going to have fewer cuts. Now, you've already essentially refuted that, but Bank of America sees it going above 3,000 or going to 3,000 at least. What does the path let's just say to 3,000 look like? We're trading at 2670, I think 2660 right now. It doesn't seem like a massive move, really.
It doesn't seem like a massive move. It's going to be, the smaller moves, get above the recent resistance levels that we've seen. 2750 up to 28. Once we get over new highs, you have now entered escape velocity. It becomes easier to go into and penetrate into new highs and leaps and bounds. We've seen this, but the mere fact is that we are in a rate cut cycle. We have entered into a U.S. rate cut cycle, whether there be aggressive or not. I refuted that they're going to be only two. But historically, precious metals surge during during rate cut cycles. Historically, on average, silver soars about 413% during the last 3 Federal Reserve rate cut cycles. So watch these charts. We share these charts. We want to share this. We're going to be sharing these at the seminar to talk about this opportunity, which I call the opportunity of a lifetime. These are the two must-know charts that you need to see before your eyes. Don't take it from us. We're not the experts, although we are the experts when it comes to holding physical precious metals in an RSP.
It's a reading rainbow thing, Jerry. It's don't take our word for it. Do your research. Mm-hmm. Do your research, and I think that you're going to find when you do your research that holding actual physical metal is a great, incredible hedge, and that there's a lot to be gained here. We're only looking at 3,000, 3,500 for the next year. That's nothing. You're going to get the power of compounding with this, because to get a 20% move on $1,000 an ounce, $200.
Yep.
Well, what about on 2,000? It's 400. Well, what about on 3? It's 6. What about on 4? It becomes 8. And these moves are consistent.
Yes.
So this is why you want to be in early. Why would you wait for the market to be much, much higher, and seeing is believing, and finally believe that it's time? We're trying to encourage you to beat that clock so that you're way ahead of the curve.
Yes.
And if gold only goes to 3,000, worst case scenario, right, for us, 80-to-1 ratio, you're still looking into the high 30s for silver, which is fantastic, because right now you're able to acquire it in the low 30s. So that becomes a great way to get involved in the market, where you're getting ahead. There is a cost. You're buying a retail product here. But for the long term, you're really giving yourself a great setup, especially when some of the outlook, when you think about what we're going to talk about in the next segment, which is the deficit, the industry, the current function and setup of the COMEX and LBMA is just a complete powder keg for triple-digit silver. So we're going to talk about that in the next segment. In the meantime, if what you're hearing has made sense, you want to pick up the phone, dial 1-877-8-SILVER or go to the website guildhallwealth.com. And don't forget to go to getyourfreegold.com. You can get up to 10 grams of gold free for investing in your registered account and acquiring physical gold. That's getyourfreegold.com. Learn more about acquiring physical gold and silver in your portfolio and getting those free grams of gold. And they're amazing, by the way. Those last-minute gifts for baby births, for birthdays, for holidays, you give them a gram of gold, and they're forever saying, it comes up, yeah, you gave them that 5 years ago. What was it worth back then?
$50, $40.
You know what I'm saying?
Yep.
So
I am that uncle. That was me at Christmas. Grand for you, grams for you, silver maples for you.
Wait till you hear the next segment and where silver's going. Outlook 2025 here on the Real Money Show. Let's get down to business. First things first, Jerry, you want to discuss this whole trolling of the 51st state and Trump's comments, which we both agree can be viewed in two ways, ultimately leading to the same answer. Do you want to go first?
Oh, he's such a tyrant. He's an imperialist. He's going to take over the world. He's going after Greenland and Canada. It made us get to the table. We all put our pro-Canada hats on. Let's focus on our sovereignty. Let's focus on our borders. Let's clean things up a bit. And that's exactly what happened. I think this week.
And the pressure that he put on helped get Trudeau out.
Yeah.
Even if it's been delayed, I've been telling people it's, look, you're not waiting till October anymore.
No.
Right? You've sped it up. Could you speed it up more? We'll see. Right? Tariff talk. I know Kevin O'Leary talked about it. I've seen posts about it. Look, you're going to get an extension on the tariff talk. Okay? I wouldn't be surprised if you get Pierre Poilievre to Mar-a-Lago and Trump does he's a great guy. We had a great talk. You're going to get that probably, right?
Yeah.
In the meantime, yes, why are they subsidizing Canada? There's no reason. And that was the whole point of the troll. If we're going to treat you, it's like making your bed. If you can't make your bed, then I got to treat you like a kid. You say don't treat you like a kid, but you can't make your bed. That's what the trolling comes down to. Now, you said Pierre Poilievre said some great things about what we can expect.
Yeah, this is all coming on the back of understanding where we are in the world. We talked about it a bit before, but Canada and gold. Canada's neighbor, everyone's worried about our neighbor is going to absorb all of our minerals. We are a resource-rich nation. Our currency is known as a commodity-driven currency. That's correct. We're supposed to be mining. We're supposed to be drilling. But we had policies, left-leaning, environmental, green policies that stifled economies.
So how rich are we?
Well, we're number one leading producer of potash. Canada is the world's largest producer of potash. Number two largest landmass on the planet. Canada is the second largest country in the world. Number two, we are the second largest producer of uranium. We're number four largest producer of gold globally. Canada is among the top live global producers of gold. But we have no gold in reserves. That's a big one. We're also number four in proven crude oil reserves and production globally. We hold the fourth largest oil reserves in the world, and we're a leading oil producer. We should not have poor people, Jeremy.
No.
We should be wealthy. We should all be driving Maseratis.
And I've said this the minute I saw that we were fourth in the world on oil. I said, why does Saudi Arabia not pay taxes and we're paying taxes? We're like one of those African countries being run by tyrants where we're not getting anything for what we're like the takeovers, right? From what's the book? That book where he talks about how they take over these countries? John Perkins. It'll come to me. Anyway, we're like one of those takeover countries, right?
Yeah.
And we're on the way to Venezuela.
Yeah.
Like we're on the scale, we're in the orange territory on our way to red. Like it is bad. I know you've talked about that. So ultimately, these are good things.
Yeah,
these are positive things.
Look what happened in Germany. Just recently, the FDP's exit from the failed Ampel coalition government in Germany, it resulted to an end to the left-green federal government. And it appears to have already had a positive effect on the German economy. Industrial production is now up in Germany. There's rising demand from China for steel. Things are moving in the right direction. But as a result, Pierre Poilievre, the leader of the Conservative Party, this week in after pressure from the trolling, it worked because the leader of the Conservative Party of Canada pledges to greenlight major resource projects if elected Prime Minister, aiming to bring back paychecks and boost domestic production of all of our our resources, making Canada one of the most strong, independent powerhouses in the world. That's where we should be. We should be among the top 3 leaders.
And since we're so good at mining gold, it was great to see the Gold Telegraph come to the table. They have been they said the other day on their feed, "Hey, do you think it's time we start putting gold back into our reserves?" And man, the response that they got on X was amazing. Something like 71,000 views and tons of reposts. So I think it is a topic we need to make public, that we need to create as part of an agenda. You can mine the stuff, but you need to have it in reserve because it's only going to enrich us. Right? And the difference between like a micro strategy and us is we don't have to go into debt to do it. We can simply add to the portfolio at an amazingly cheap price. Look, China picked up something like 6 tons of gold, or maybe even more, I'm not quite sure, in December.
Yeah.
Okay. That means that they paid at the lowest $25.83, but most likely paid much higher.
Very true.
That is a floor in the market. They were willing to buy it at these much higher prices, so they are far from done. Mm-hmm. Now, when you understand the structure of what's going on in the COMEX, you have a deficit in silver. More silver is being used in all sorts of industries, particularly green stuff like solar power and car batteries, etc. More silver is being used than it's coming out of the ground. So you're going to the COMEX to get the rest of the inventories. And now with the quote-unquote threat of tariffs, entities are going to the LBMA to drain the LBMA to reshore the physical product. And you need that physical product to paper trade the market. They're trading more than an annual production of silver inside of a week in the metals markets. And without that physical metal, you're not doing it. So the setup for a massive squeeze in silver, why do they get to continue this? Because there's money to be made on the short-term trades, but they're massively short. So if it blows up in their face, we are not in a state, it is too big to fail. That means they're gonna go bankrupt. They're gonna go the way of silver. They're gonna go the way of copper. It's gonna be crazy pandemonium. In the next segment, we're going to talk about the steps it's going to take to get to real price discovery on silver and why we see triple-digit silver. The number 18778 silver, the website guildhallwealth.com. SRS Rocco reported that LBMA silver inventories are down 25 million ounces in December. They are at all-time lows right now. The tariffs are leading to huge stresses in the physical silver market. And there was an interview, I think yesterday, with Daniel Galley, senior commodity strategist at TD Securities. This was on the street. We put it on our X, so you can go there and see it right now. Maybe we'll get it out in our newsletter. And basically, he's saying that exactly what I said in the last segment. The setup, because the need for the physical commodity with combined with tariffs, getting it from somewhere, you've got to get it from somewhere,
right,
is leading to what they believe is going to be a 30% increase in prices for this year alone. Now, I just want to talk about very quickly, I'm going to actually, before that, let's do this. Here's an article that was on X the other day.
Okay.
And what it talks about is silver content in the next generation of solid-state EV batteries.
All right.
And this is pretty good. 1,000 grams of silver, up to 1,000 grams of silver in a battery. Okay? Which means, in the vehicle. That's a kilobar. Just so everyone knows, why is a kilobar 32.15 ounces? That's 1,000 grams. That's a kilobar, okay? Do you know how many vehicles they're planning on producing?
How many?
Well, Jerry, 20 million EV vehicles. That's 25,000 metric tons a year of the stuff. So here's a quote. While the metal trades near $25 today an ounce, that's kind of off, its inflation-adjusted high would be $200 an ounce, with new industrial demand potentially consuming 40 to 80% of the annual production. Mm-hmm. So I don't know about you, but I know that last year silver was about getting from 22 to getting back above 30. And it was a football game. It was a game about yardage.
Right.
Gotta just, you get
a couple yards.
I would say to people, if we can get to 27, the psychology of the market changes. It'll feel inevitable that we're going to break 30, and it will happen. And that's what it did. Okay, so in December, you retested a little bit. You got below it. It's going to be the same thing this year. Gold goes to 3,000. Anything above 3,000, it doesn't matter. At 80-to-1 ratio, gold is going to pull silver into the high 30s. At what price point does the psychology kick in? And the psychology is it's inevitable we're breaking 40. So I see this year as a bit of a repeat of last year with some really good gains to take away from that. Now, once you break 40, I believe, as someone who's been in the market a long time, and I think I understand the psychology of the market, the psychology becomes, once you've broken 40, the psychology is it's inevitable we're breaking 50. Mm-hmm. So you're now moving from $3 moves, right, of inevitability to $10 moves of inevitability. And once you break 50, you're into true price discovery mechanism on the silver. It breaks free.
Yep.
It's over. You've cracked the code. You've gone past that point in the video game that you couldn't get past forever, and now you're just going and going and going. You know, it's like playing, you know, you'll hear tennis players say, it felt like I was playing with a watermelon. You know, I could see the ball and it's going to be like that. So we're still yardage, football, getting to those next levels, but once we do crack 40, it's going to feel inevitable we get to 50. And once we get to 50, these numbers like $200 an ounce start to feel a lot more doable.
Mm-hmm, attainable.
Thank you. Much better word than doable.
For sure. I mean, people are looking at it right now where we're hitting like all-time highs. Have I missed the boat? Absolutely not. We have to consider the participation in Exter's pyramid. Less than 1% of the population own any physical precious metals in their investment portfolios. When we have the participation coming in, like we're seeing in the EV space, you know, that's how many ounces of silver was that? 64 million ounces of silver just for that one industry. And we're not even talking about the big elephant in the room, which would be national defense. Talk about the need to add a national defense silver stockpile to recognize silver as a critical mineral. That hasn't been done yet. Why?
Yeah, if Canada's going to rebuild our military, you're going to have a ton of silver in that.
You're going to need a lot of silver.
A virtual ton.
Exactly. So knowing that you cannot replace silver in military applications, you cannot replace it. It's required for frequencies and satellites, missiles. This is national security. Silver is a critical metal, and the demand is there. This is why we're seeing the deliveries and the drainage, and people are waking up. There's a growing awareness and beyond awareness that the fact that several issuers of these contracts of silver and these financial products that are supposed to invest in gold and silver, these ETFs and gold certificates and silver papers,
is it really there?
They do not have the amount of precious metals that they have claimed. They have revised the prospectus for GLD a few times. They will continue to revise. And again, this is the argument. Only invest in physical, only invest in silver, physical that you own in your name. And that's what Guildhall offers you, is title ownership of physical precious metals in your RSPs. If we didn't, we'd be simply compromising, and you might as well just take it home. If you're going to be owning product in your RSPs, ensure that you're getting bar numbers. Do not expose yourself to any risk of counterparty default. And that's what these LBMA and COMEX people are running for the doors. They're trying to get delivery, and as you should, Become your own central bank with Guildhall. We're standing by. We want you to give us a call and join us at the seminar. Jeremy, want to share that information one more time?
Saturday, February the 1st, 10:30 a.m. It's going to be in Vaughan at the Novotel. You give us a call, 1-8778-SILVER. Get your booking today. Also, find out more about holding it in your RSP. Go to the e-store, guildhallpreciousmetals.com. Start small. Pick up something. Get it in your hand. You know, crawl, walk, run, as we all like to say. It's going to be a fantastic year in the metals. If you've missed a show, catch us on YouTube, catch us on Spotify, visit us on Rumble, and also follow us on X. It's been a good one. We look forward to speaking in next week, and we can't wait to see all the things that happen in the gold and silver market in 2025.
Future's bright.
It's been the Real Money Show on 640 Toronto.